Now, the part I really enjoy actually speaking to RP Data, it's always great information on a national level. And today we've got the Senior Research Analyst, Cameron Cusher, on the line. Welcome, Cameron.
G'day, Anthony.
Cameron, you've just released your October results for RP Data Riskmark. What's happening in the market right now, mate?
What we're seeing across the board is the market's really slowing right down. Using non-seasonally adjusted numbers, over the last year, capital city property values have increased by 6.5%, and over the quarter they're up by just 0.4%. So a lot of that heat is really coming out of the market, and these numbers are to the end of October, so they don't yet include the interest rate hike we got at the start of November, and then that little bonus that the banks gave us. So we probably expect there might be some further weakness next month. For Adelaide specifically, though, it hasn't actually been too bad. Over the quarter, values are pretty flat, 0.2%. And over the last year, property values have increased by 5.5%, so slightly underperforming what we're seeing across the country.
Okay, now, the latest figures coming out of the REI over here is that we've had for the quarter, which is obviously including a bit of winter because there's a lag time, but 09 figures were 5,956 transactions and 4,756 this year, which is a very substantial drop in the number of transactions. Now, admittedly, that's not your spring again, but it's sort of late winter, early spring. Any thoughts on that?
We're probably not that severe, but we're certainly seeing that volumes are falling. Obviously, the higher interest rate environment. At this time last year, interest rates were down around the lowest levels they've been in 50 years. There was still the first homeowners grant boost hanging around. So no doubt last year was much more attractive to be buying in the market than it is now. Interest rates are back up now above average levels and were at average levels. So it's harder for people to get into the market. Plus the fact that property values have increased generally over the last 12, 18 months, making it more expensive to buy the property anyway. So affordability is an increasing issue, and given that, it's no surprise really to see that the number of sales happening is really starting to trend downwards.
And bubble burst, everyone talks about it non-stop, everyone's absolutely fascinated with it. Your take on it?
We don't believe that there's a bubble to be burst. We think that the prices, it is quite high. Affordability is an issue, but the banks are pretty wary of who they lend to. There's still really strong demand. Really, if you want a decent job, you've got to live in one of the capital cities, and there's going to continue to be strong competition for available stock. But at the moment, we're seeing affordability is hampering any sort of demand. There's a lot of stock on the market, and there's not a lot of people in a position to buy at the moment. But overall, people still need to live in the capital city markets, and they're willing to pay the price to do so.
Now, with the movement in pricing, and basically you're saying that it's very stable now, the Reserve Bank have come out and said they don't think there'll be need for more interest rate rise in the immediate future. I have a sense that the market's just kind of sorting itself out, where the buyers are realising there's a bit more leverage for them. Sellers, though, on the other hand, are not having to really discount heavily and are either withdrawing the properties or hanging on. Is that a feature through the whole market?
Well, what we're finding in Adelaide specifically, there are certain areas where there is a lot of discounting happening and properties are taking a long time to shift, and specifically that's Brisbane and Perth. And both those markets have really underperformed over the last 12, 18 months. Over the year, Perth values are down 1.9%, Brisbane are down 0.7%. So compare that to the 6.5% growth nationally, you can see those markets are really not doing particularly well. In Adelaide, over the last 12 months, there has been a slight increase in the level of vendor discounting, 4.9% for houses last year, up to 5.2% this year, and 5% for units last year, 5.2% this year. So it's not been a huge increase. It's taking slightly longer to sell the average property as well. But what we're finding at the moment is that listings have really been ramping up in some areas, and it's not so bad in Adelaide or South Australia, but listings are back to the levels we saw during the global financial crisis. So clearly there's a lot of people looking to sell, but it's certainly perhaps not the best time to be bringing the property onto the market at the moment, because there is such a huge amount of competition and not a lot of buyers. In fact, the current level of stock on the market in Adelaide is about 25% higher than the 12-month average. So there has been a big ramp up in listings at the moment. What we tend to find, though, is coming into Christmas, people will start to remove those properties from the market. Christmas isn't the best time to sell. People are on holidays. People are thinking about other things. The real test for the market will be come February or March next year. If all these people decide to bring their properties back onto the market, that may create some further weakness in property prices.
And Cameron, final question. When do you think the spring amount of stock level will actually become a statistic? It would basically be February? Whether you report in February?
Yeah, exactly. February or March, we'll really get the best idea of what's happening. But as I said, the listings will be the key thing to watch. We've seen that auction clearance rates nationally have been falling, listings have been mounting. So the listing story in February or March will really tell the story of where we're at in the property market. But even if we do see some falls, it's certainly not the 30-40% falls that some people are suggesting. It's probably going to be less than 10%, if even that severe.
Cameron, as always, been sensational. We'll post your report to our website blog so everyone can have a good look at that. In the meantime, have a great Christmas, and thanks once again for your very informative and right up-to-date report. Thanks, mate.
Thanks, Anthony.
Now, let's go to more Behind the Blinds.